Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. World on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you guys buy it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It's Tuesday. Markets all over the place. We got some interesting stuff. I mean, I don't know if we really have like real drivers today, but the markets are moving around. I guess the big driver is the news that the ECB might raise interest rates 50 basis points at their next meeting, and that is putting pressure on us in the bonds, and we're headed right back down to 118. And once again, I am like on the wrong. You know what? I should just switch back to Workspace 3. It does seem to me that Workspace 3 is more processing power, but pretty soon I will be able to move over to like my Rhythmic setup where Jigsaw will not be limited by NinjaTrader, so probably should just stick over to this one, huh? Volume profile. Oh, we can roll over CL. Hold on. I'm seeing big moves like all over the place here, man. This is really interesting. Okay. So anyways, here we are in the treasuries. I mean, we were a little bit pressured yesterday, but for the most part of the session, it didn't go anywhere. It dropped later after our stream and then bounced right back up. Here in the overnight, they're falling down again. So it's pressured, but it's not a ton. And again, the mover right now is the ECB, and they have their meeting on, or their press conference and everything on Thursday, I believe. S&P 500 taking a bit of a plunge later in the day, hitting some technical levels and then just bouncing hard off of it. Maybe a little bit of a retracement here overnight. Oil still struggling to break $100 though. It's getting up there. I think it probably will get above $100 eventually. But gold and silver, well, look at this. We're actually getting some moves here in gold this morning. Like it's getting dropped again here. No real fundamental reason why, from what I can see, is just it's a moving. But when I come over here to the dollar is significantly weaker than it was a few days ago. They are all the way back to 106.5 or so, which is where we were for a long time. But they very much come off of those highs that were around 108. Bitcoin not really reacting too much. They are at the higher end of their range, but you can see anytime that it gets up there, there's somebody out there selling it. So when we come back over to here, so I do believe we have some news and so forth today, right? Let's make sure we got everything out. Okay, yes. So we do get building permits here in a few minutes. So this is going to be an important number. I'm wondering if when we get here in about 10 seconds, if we see some pulling for this one. It looks like the market is kind of leaning towards leaning towards the numbers will be in line, if not okay. Or rather in line or below expectation. And well, actually, I'm not quite sure. You know what? I have everything mixed around in my head here. Let's just see what happens. If that number is higher than expected, then that could justify them selling the treasures before it. But I don't think that they will be. So I'm not quite sure why they're selling off the way that they are. So I think that these numbers are probably gonna say, oh yeah, it is gonna be a 75 basis point hike. All right, here we go. 15 seconds. Hello, Theo. How are you doing? Welcome back. Okay, so it's a little bit under expectation. Housing starts change month over month, negative 2% versus an expected 2%. But building permits change not as negative as anticipated. It seems a little mixed, but this is like a, well, let's. Can I now buy it? Okay. I'll buy it. I'll buy 2. See what happens. It seems like there is a more persistent offer out there. Could be more related to the ECB instead of you know, the housing starts number, which would be a really makes sense, but very unexpected, right? So this 30 is kind of acting a little shifty here. Okay. It was a kind of light liquidity both ways there for a bit, and then, well, okay. That was a little bit of a nerve-wracking trade when I first took it, but it looks like it's going my direction, isn't it? See if the 10-year here gets back below 3. My AC is coming on hard this morning. Well, this is curious. So it does look like we're winning out, but it's not incredibly strong. There is an iceberg there at 04.5. Let's reset things to there. I'm going to come over and see if we get anything interesting overnight on Twitter. Reality is, we all know as traders what we need, but not all traders have the protocols in place to implement what they need. Imagine a professional athlete running laps around a track without a timing device. I see so many traders fail to reach their true potential because they lack even the most simple timing device. Today, I won't be cliche. I won't tell you you need to manage risk because you already know this. I will tell you to put in place a protocol so the risk is taken care of for you. Yeah. First time in my career the ECB ever had sources comments 2 days before a meeting. Nuance matters in trading. Probably why they were pushing down so aggressively, right? It's just that I really don't. I think that the Federal Reserve is going to do a 75 basis point hike. That's all. That's all. Jacob, how are you doing? Another okay few ticks up. Can't believe they reopened Open Outcry, bruh. This is literally we work for everyone's least favorite market makers. Well, I forget which market was it that they had an Open Outcry floor for? Yeah, it was CBOE, but it was like, you know, which it was and it was options. I know it was CBOE and it was options, but I forget what options it was. Air travel is broken. Here's why. Wall Street Journal. As inflation peaked, asks Anthony Crudelli. It's a good question, Anthony. Who knows? I'm kind of at the moment, I'm kind of thinking probably not, but we'll see. Wells Fargo chief economist was among those predicting a 100 basis point hike at the July FOMC after the June CPI. He turned skeptical on Friday. It'll be on the table, but trying to get a consensus or a supermajority to go for 100 basis points seems a little bit aggressive. Probably. Rising interest rates are slamming the brakes on the global housing boom that spread far beyond the US during the pandemic, keeping extra pressure on central banks as they try to tame inflation without triggering deep downturns in their economies. And then Taleb talking about how much he hates the UAE. Okay, so now we're all caught up over there. It was a good few upticks there. I did get a fill. At the moment, kind of looks like they reached the extent of that bull move, don't you think? I have one more contract on. I'm kind of tempted to just take it off there at 04.5. Like, look at the liquidity there is just terrible. We'll take it off. I don't like the liquidity there is terrible. It's kind of making me skeptical about our ability to move anytime soon. I am curious what is going on here with gold. Well, the whole complex, gold, Japanese yen, treasuries, all kind of took a pretty aggressive move down there. It started before the pit open, quite a bit before the pit open. So doesn't necessarily have to be driven by news or anything. Yeah, so for short-term trading here, I would say that the conditions here are not super great. We're already kind of stuck in this hole where they're going back and forth across 04.5 and nobody really wants to trade it. So that's a problem because it's likely to just kind of chill there unless somebody comes in with the market orders and pushes it further. But I kind of question why anybody would do that because we just had the news, the housing numbers. That was probably the most significant piece you're going to get. It didn't really move them. But it could just mean that the pressure is, just really strong to the downside. I mean, the ECB news is significant for interest rates. So, Charlie Munger. Wait, what about Charlie? Gosh dang it, Twitter. Charlie Munger not worried about inflation and the economy, says The Street. What the heck? Apex Legends player gets himself and team banned from a tournament for teabagging. What? You can get banned from a tournament for teabagging now? What has esports become? What has esports become? Look at that. A little weak there at 04, but a big order at 03.5. The liquidity here in the 10-year being a little weird. I have to say, you remember earlier in the week, I was saying, well, I mean, it's not that far in the week. So it was yesterday. Remember yesterday? And I was like, wow, this liquidity don't look so good, guys. This is terrible liquidity here. And, but it'll probably get better throughout the week because we're kind of looks like we're going into less volatility. Well, certainly doesn't look like that today, does it? What we're seeing here today, I don't think is very much in line with that thesis. They are moving across 04.5 back and forth. The 04 kind of pulls. That is probably more of a lure than anything. Hello, NASDAQ Killer. How are you doing? You're early. Welcome. Like that 04 kind of pulls, but that might be a lure. Let's watch, see if they're able to coax more than 400 contracts to trade there. That looks like I'm pulling to be weak, to look weak because I want a fill. Okay, they did trade down, but it didn't really nothing too interesting. It just kind of ticked down, didn't take a whole lot of volume, might tick back up. It hasn't done so yet. Liquidity at 03.5 isn't backing off. Weech thesis, I'm good, hope you're all right. I'm doing good. Okay, yeah, back up to 04.5. Been a good bit at 04. So I have been without my multivitamin for a couple of weeks now. Just, I don't know, because I was too lazy to order it and everything. So, I usually take it for the magnesium before I go to sleep, because you have stronger dreams and stuff. And I had dreams, dude. I had this dream that there was a bunch of monks and they were creating like a human bridge. Like they would all lean over on each other and bend their backs so that you could walk on top of it. And they were like, yeah, that's pretty cool. And then we all lived up in the mountains for a couple of years. That was my dream. Okay, I don't know. It was kind of a weird one, don't you think? But you have more vivid dreams with it. And I slept so much better last night. So much better last night. It's just much, much more deeper and more restful sleep. So I'm feeling pretty upbeat today. Yeah. I also had a really good workout. Oh, okay. That was a little bit better of a... So they took 04 quite aggressively. 03.5 really pulled. They didn't trade through it though. So this is still kind of the games. I'm not seeing signs of a strong meta order out there at the moment. I kind of see a situation that in the liquidity that somebody could really take advantage of if they wanted to, but I don't know if anybody's actually going to step in here. Magnesium is in. Oh man, I don't know. I think it's the magnesium in it that does it. Like the thing is if I go more than a month without taking that multivitamin, I start to feel tired. Not very good. Did they tell you where to find an edge in the financial markets? No. We were just gonna live in the mountains until the one of the guys passed on, I guess, and then continue on with our journey. I don't know what we were doing, dude. I can't. The whole, it's one of those things you never can remember how you got there or what happened before. So maybe it was an inception thing. Maybe somebody was trying to implant an idea into my brain. And although I can't imagine what they'd be implanting into my brain. I sleep better when I have loads of fatty lamb ribs. It could kind of make me want to get a euro. Just go with the flow. Yeah. No, they were wise monk people. We wanted to live with them and to learn from their wisdom. I guess. Back up to 04.5. See, so they do this. This is one of those situations that always kind of confused me. But I feel like I understand now. You have an area of low liquidity of 4.5. For whatever reason, the market makers don't really want to put up a whole lot of liquidity at 04.5. When it trades up, look, 61 contracts, it'll trade up, and then there's only 60 contracts on the bid, and then it'll trade back down. Now, at 04, often when you get that thing, what you get is the edges of it. are just like won't move, my voice won't move at all. In this instance, the 04 is really weak as well. So something you could do, if you had a really strong bias, like if we really wanted to go long, then we could sit there with a contract at 04 and hope we get the lucky fill. And as long as we get a fill on, like it crosses on light volume and it's not like a super aggressive take when we do it, then we probably can hold this to go long. Okay. But, it runs in this situation and you think, okay, which side is it going to break out? That could be the way that it like goes and it runs. But then what'll happen is you'll have like a little bit of a breakout and then like nothing happens and it comes back into it. So it is a very clear hole around 04.5 or so. Now that doesn't mean that it will stay there forever. But at the very moment, it does not make for a very good trade, does it? Apex Legends player Dilly has been disqualified from a recent tournament and banned from all future competitions hosted by Fate Legion for teabagging the body of one of his teammates. Wait, what? He wasn't teabagging and disrespecting an enemy. He was teabagging his dead teammate, and they were immediately disqualified and banned. Are you kidding me, man? This has become a hot button issue in the gaming sphere, with several larger streamers reminiscing about how they commonly experienced verbal abuse after dying in matches. Replies seemed equally shocked by the ban, expressing that gamers have gone soft. That is, is that in the rules? Listen, if you can't teabagging in video games anymore, I don't know if I want to play. Not that I ever did that. That was never a thing in the games that I played. But come on, are you kidding me? You kids, none of you. My stream audience is old for the most part. You're all in your 30s and 40s and 50s. So these teenagers. Oh, we can't teabag anymore. Good grief. Some players are calling this an overreaction on the part of the organizer, including Dilly himself. In a short Twitter thread, Dilly called his sudden permanent ban unprofessional and very dumb. He called out Fate Legion for making up a rule on the spot where one, regarding toxicity, didn't exist. Disqualifying a whole team permanently from all future tournaments for a made-up rule is a complete joke, he wrote. Teabagging my own teammate is not toxic in any way, and I'm not accepting that rule. It really is. It really is dumb AF. Players will conduct themselves in a friendly manner and keep all forms of toxic play out of the chats and matches. It states going on to explain that punishment is up to admin discretion in listing teabagging explicitly. Jeez. Imagine losing your job for teabagging, right? I wonder how much money you're actually making from playing Apex Legends professionally, though. It's probably not that much. And he's probably a kid. Man, that is just okay. So what does Reddit think about this? What a joke. Yeah, okay. Tournament admin rips bongs live, but teabagging is somehow unprofessional. That's so dumb. Well, pretty much everybody in this thread thinks it's dumb. See, I never did that sort of stuff just because I'm not into being rowdy. I'm not into being rowdy, okay? Um, I see so a thing that my stepson is going through is he wants to be rowdy, and when he's with his friends, they're always talking about inappropriate crap and you know, uh saying controversial offensive things they probably shouldn't. They just I don't think that's the way you ought to behave because it makes you appear like an unintelligent ruffian. The Vulgate. That's where the term vulgar comes from, right? The Vulgate, because that's what the dirty, uncivilized plebeians would behave. That's the only reason why. But to just outright ban them for a little teabagging is especially with how common it's been in gaming, it's just silly. Just silly. Hmm. Hmm. Which sites do you like to use for news? Everything, really. No, I read Bloomberg a lot because I have the subscription. Although I kind of wish that I had gotten the Wall Street Journal because it feels like I'm sure it's going to be the other way around, right? This is like you get a news subscription because I can't afford to buy the news subscription for all of them. So I got the news subscription for Bloomberg. All right. Get the Bloomberg news because there was a couple of articles on Bloomberg that I wanted to read. But when I go and I read the front, here, I'll show you. I'll show you. Here, we go to Bloomberg. So when I go to the Bloomberg front page, what do we see? A bunch of stories that I can see on CNBC. The Moochies halting withdrawals in a fund after stock and crypto swoon. Yeah, remember when it was a big deal? He was starting a cryptocurrency fund and how rich he was going to be? Mm-hmm. China warns Taiwan visit by Pelosi would have, quote, grave impact. What are you giving me here? Bloomy. What am I paying you for? What am I getting on your website that I can't get elsewhere? I'm not seeing it. So then you can come in here, you can do opinion. Okay. Their opinion is always on a bunch of crap that nobody cares about. Let's hope Twitter beats Elon Musk in court and quickly. Yeah, okay, well, I don't agree with that, but he is probably going to lose. Want to become a digital nomad. I don't know. Meanwhile, over at the Wall Street Journal, we have the Fed Whisperer giving us the inside track on what the Federal Reserve is going to do next. I picked the wrong subscription. Should have done the Wall Street Journal. But I bet you when this Bloomberg subscription finishes and I go and I buy the subscription for the Wall Street Journal, and then all of the stories that I'm going to want to read will be on Bloomberg. Ugh. What else you got? You got the Financial Times is another good one. If you're in Europe, then you want to do the Financial Times, right? But so I visit CNBC a lot. Maybe I should go and get their pro subscription, and then we can watch, Fast Money and stuff. I always enjoyed watching that back in the day. But really, I think Zero Hedge has become my favorite. Lately, here over the summer, they haven't really given us anything very good. They have this premium subscription. I wasn't really very impressed with the premium subscription. You maybe get like one article a week that's like important that could be like useful, and it's not always as critical as they seem to make it out to be. They do have this one that's like $100 a month where you get the Wall Street analyst reports in a Dropbox. That's what I'd really like to do. I don't think I'm willing to pay $100 a month for it yet, though. I'm, keep it to like, well, I would like to have like a news subscription that's like $5-10 and a news subscription that's like $50, But I'm just not finding the news sources that I really feel give me the value. Like if I'm going to be, I could pay $60 for like cable or Netflix. Netflix is a lot cheaper than $60, right? And I could literally, there's enough content on Netflix that I could just watch Netflix 24/7 if I wanted to, right? For years. I could watch it 24/7 for years and never run out of video content and interesting things to watch. Especially with a news site, there should be tons of stuff for me to read and to increase my knowledge of the market. I don't know if I really get it. But the thing about Zero Hedge is that they will post these reports on like what the Wall Street analysts are talking about. Media confidence ratings dropped to fresh record lows. The problem with Zero Hedge is they also post a bunch of bullshit. Like they definitely have their biases. But I think the one that I find the most worthwhile is Financial Juice. He's talking right now. Here's Financial Juice. And they have a really great earnings calendar that will play sounds for you and will do stuff depending on whether it's above or below consensus. And you can set a threshold for how above or below consensus it needs to be so that you can react to that really quick. They've got the stream. The stream is pretty good. So I have to say I've been doing News Squawk. So it used to be called Brand Squawk, but now they're called News Squawk, which is kind of a funny name. It's just so generic. I'm surprised that they got like the URL and everything for it. Right? Okay, so I've been doing News Squawk, and for treasuries specifically, I find it to be useful. They are quieter than Financial Juice. Financial Juice will say stuff to me a lot more often than News Squawk was. But, I think it's really more that News Squawk understands much more when something will be relevant to that market or not. And they have them having a fixed income specific space is, I think, really, really valuable. So you can get News Squawk right now for about $50 a month if you buy like a full year, which is way, 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 way better. No, sorry, not $50 a month. It's like $100-200 a month or something like that. It's still pretty expensive, but it's not like it used to be $500 a month, and now they're bringing it down to like $200. It's a good deal. It's a good deal. If you're somebody, you're doing pretty good in the market, you still don't have a News Squawk, and I'd be really surprised if you were doing really well in the market. You didn't have a News Squawk, but I digress. News Squawk is a really great option. I kind of wish that I could do that one. But if you're probably poor like me, well, not poor. We're not poor. I'm not. My problem isn't that I'm poor. My problem is that I am cheap. So if you're cheap like me, Financial Juice $70 a month, or you can get like a lifetime membership for $1,000. I got the lifetime membership. Don't regret it one bit, and I've made money on Financial Juice for sure. I think it's probably paid for itself, but then I probably lost that money gambling something else. So I really like Financial Juice, and I listen to the News Squawk all day. And I have an affiliate link in the video description. I probably don't push that enough. I probably should talk about it every day because of all of the things that I have available for you in the video description, I think that the News Squawk is the most valuable. It really is. Breaking news is one of the best predictors of order flow that we have. So having a News Squawk and being able to react to that stuff quickly is really, really important. All right. I mean, everything that I have in there is something that I believe provides you value. My indicator suite is great. If you're using NinjaTrader, I think that my indicator suite is an absolute must to trade interest rates. Like, how are you going to trade interest rates through NinjaTrader without spread charts? Is just, I think you want to see spread charts. Having the dollar index, I think you want to have the dollar index, and it's cheap. It's only $100 for a lifetime license. And I also have some really cool level 2 stuff in there if you want to build robots and stuff. So, I think that, but it's, I think the news squawk should come first. I think if you don't have a news squawk, that's probably hurting you more than anything, right? Plus, a lot of the stuff that I have in my, the affiliate links are just for fun. Like the mugs. The mugs are for fun. You're here every day. I mean, if you guys are here literally every day listening to me for 2.5 hours, I think that you should have something to show for it, right? Like, how many people? There's all these people. They just like to watch Marvel movies every 3 months or whatever. They go to a movie, and these people are absolutely obsessed. Like that's the way that people are. We're tribal, and we want to just show like that we're a part of the tribe, right? You guys are my crew. You're here every day. I think you should have something to remember the stream by. That's why we got the mugs. Traders gonna trade, because a lot of the time the markets aren't actually doing anything important. They're just trading to trade, and that's usually how we as traders screw ourselves over. By the way, while I was kind of yapping here, there was a decent drop, and then they snapped right back into the liquidity hole at 04.5. What else do I have in there? Oh, financial juice, or not financial juice, Yada. I love Yada. Ooh, which reminds me, don't we have a, let's see here. I think that they have a new desktop. I'm going to check it out. If I can remember how to log in. Maybe it's like a beta thing. Yeah, desktop. Visit or copy and paste it. There we go. Okay. Now I have to remember my password. I'm going to have to do the recovery. Okay. Let's see here. Can I see? View past results. So it's like a lottery. You come in. I think I have like 4 tickets right now. Okay, so I actually had one where I got 2 numbers, but you got to get 3 numbers to make anything. You get like 2 numbers in the yada, then you make something. But apparently my luck is not so good. Apparently my luck is not so good. And you can like even like create pools and stuff. So anyways, and like oh, I don't know how much I have in there. I think I have like $80. Yeah. So like I only put like 30 in it. I only put the 30 in it once, and so I've like more than doubled my money in it just from like the from winning. Essentially. It's a small range today. Yeah, the treasury is pretty crap right now, isn't it, Sam? Like I said, I got to tell you, this thing right here, well, you can see it right there, 040, 100 lots, okay? They traded down, only 100 lots come up on offer. There was a moment there where nobody bid or ask. Okay, look, nobody's putting in a bid or an ask at 04, right? Don't trade when you see that. Just straight up. That is a low liquidity hole in a situation where we have no real fundamental driver to drive trading. We don't have any kind of end of month rebalancing, any of that. Like everybody's kind of going to be sitting tight at least until the ECB meeting on Thursday. And probably until the Federal Reserve meeting next Wednesday. And the treasuries seem to think that they have the treasury market correctly priced out according to what the Federal Reserve is going to do. So they don't have any reason to come in and take trades. So if the informed traders aren't trading and the liquidity providers aren't trading, why should you be taking a trade, right? And we did see that. I took a reversal trade, and when it came back into this spot, I said, oh, this isn't very good. I took it off. That said, a little bit of flattening here today. So, I don't know. I could envision a little bit of a move down. You trade max for 1 tick profit? Well, that's not bad. Well, there has been a couple of opportunities to get it between 04 and 05. Or, sorry, 04 and 04 half. But like the thing is in a situation like this, there's not very many people trading, right? And you coming in and taking a trade is, you could actually have an impact in this kind of a situation, right? Because I think that most of this volume that you see going back and forth here is just robots trying to catch the edge. That uptick at 05 half is probably the best upside tick that they've had in a while. Anyways, if you don't have a Yada account, it's basically like free money. You go in, you put $30 in there, and then you get tickets, and they usually make at least $10. And you should probably have a rainy day fund out there, anyways. So it's just like a savings account, where you get like 2-3% per year. You'll get better than like what your normal bank would give you. And it's fun. So it encourages you to save up a rainy day fund, and it's fun. So I love Yada. I just feel like I don't always do a very good job at, for lack of a better word, selling to you some of the value that we can provide to you here on the channel with the affiliate links and everything. I'm in it. I think you must have done a typo there. I'm assuming that means 118.05 half. Long or short? Oh yeah, the other thing is the Jigsaw. If you ever want to get Jigsaw, because this is the software that I use. you get a $100 off coupon if you use the links in the video description. So these are all things in the video description that I think bring a lot of value to you guys, and I hardly ever mention it. I should probably be mentioning it all the time, so I feel like sometimes I'm not serving you guys very well because there could be somebody new that doesn't know about all that stuff, and they might have taken advantage of it and they don't. Same with just kind of like, where can the stream help you, But you know what? It's summer. I don't know if it can help you too much. Okay, so you're long at 05 half. Well, it's not the worst thing that could happen. Obviously, we would much rather be long from 04, right? 05 half is probably the trade that I would make, where I think it's going to break out and I hit into it with a market order and then it never goes anywhere. and it just kind of chills around in 04 half before I give up on it, and then it busts out and breaks the high. Oliver Mulder, what is the default reset time for recent ask bid volume on Jigsaw? Okay, so I think it's like 10 seconds here. Oh, it's 2.5 seconds. So I have it set to 2.5 seconds. I actually have it set a little bit different for the E-mini. I have it set to 10 seconds over in the E-mini, believe it or not. So here in the treasuries, I want to see how much it takes every time it clears. It actually can be really useful here in the treasuries too, to set it to be like 10 seconds, because it will tick back and forth here in this range at 04 half, and it's kind of hard to, you don't know how much actually traded here in the middle over the long run. But usually I can look at my other indicators, like my cumulative delta and everything, to figure that out if I need to. I'm more interested in every time that it actually does tick through, change price, how many contracts did it take, right? Because the one of the things that I find the most useful, so again, in order flow, we want to predict future orders. Okay, if we don't have something that is going to predict the future orders with a high degree of certainty, I don't want to be playing. The most important thing, the thing that's going to make the biggest difference between just completely bombing all the time and at least being able to tread water, is knowing when to trade and only taking trades when you have a real edge, which means something about what the future orders are going to be based on a prediction about how an institutional strategy works, rebalancing behavior, a reaction to news, the fundamentals, etc., etc. Even sentiment can in some instances give you really good ideas about where it's going to go that day. Okay. So how do we know when we don't really have that? Like, maybe we think we have that and we don't really have that. Well, one of the things that's going to tell you that is when you have low liquidity in a certain location, right? Because what will tend to happen is you'll have a trend up, and then it will pull back a little bit. And when you get into that pullback, you're going to have that area of low latent liquidity. It's like, just no market maker is really willing to put up a whole lot of contracts, right? See, 27 bid, like, really? Okay, well, they're able to spike up to 300, but I mean, come on. And it could probably tick back down on only like 50 contracts again if it wanted to, right? That's not a market that has a large order, that we can predict coming through it. That's a market that's basically dead and stuck in a hole, right? Good reason not to trade it. If I'm in a position, unless I'm expecting it to trend all day, that's a great place to get out, right? So that's why I find that shorter time useful in the treasuries, because I want to be able to tell, okay, yeah, we're getting that low latent liquidity there, right? And then I rely on other tools to kind of see, how much did it take over the longer run to get through there. But I feel like that it's a lot easier to do that by watching cumulative delta and comparing it to the price. I want to, if I'm getting a good meta order, I want to see autocorrelation in price and cumulative delta and so forth. Hey, look, there's a tick for you. So if you only want one tick, did you get it? Did you get it there, Sam? I'm happy for you. Makes sense. I got all of mine on 2.5 seconds as well. The setting I find the most interesting to play around with is like the update interval. So I set my update interval to 100. There were times when I had it at 7, but I've found that in a really, really aggressive market, that's just too. It's just not good. No, I better stop trading. You said you only go for one tick, right? You only go for one tick. Well, maybe you have the limit order still waiting. Did you just not get filled? Yeah, even on the E-mini. I have to admit, I don't really pay attention to the order flow in the E-mini all that much anymore. I could probably justify getting rid of these two here and putting something else up. Okay. Well, now you got filled. Now you definitely got filled. If you didn't take your profits there, then you're just lying to yourself about that you only take one tickers. But then maybe you're sitting there thinking, oh yeah, but I could have held it and gotten 06.5 or maybe even 07, maybe even 08, 09. Wouldn't surprise me. I don't know. This is kind of a weird market because the trade that I took was down in here. Okay. The trade I took was like at 03. I built up a little bit of a position because I thought that the housing numbers were not so good. Not so good. And that really solidifies the market expectation that the Federal Reserve is going to raise rates 75 basis points at the next meeting. That will put us at 2.25. Okay, so let me give you a little tip that I learned here. When you go to like the CME tool, let me pull up the CME tool. This is like one of those segments where if I had a video editor, you would video edit this part out and make a short about it so that you can see this bit. Learn from it. Hold on, New Squawk is talking here about cryptocurrency nonsense. Okay, so the a really useful tip if you're keeping track of interest rates here is that when they list the interest rate, it's listed as a range. Okay, so like you'll never see it 0. You'll see it 0 to 1/4, right? You'll see it 0 to 25 basis points, essentially, right? But the funds rate tends to be closer to the low end of the range. It's like it will start at the low end of the range, and then if there's really demand, it will raise up until it gets to the high of there, and then it'll drop back down again the next day. That tends to be how it works. If you look at like so we can come in here, federal funds rate historical chart. I think we can see, yeah, right here on Fred. Okay, and we really bring it in here. Right. It's like for the most part, it was like 0 when it was 0 to 0.25. What is the rate really? It's closer to the bottom end of it, right? So when you're looking at these numbers here, just think about the bottom end of the range, right? So we came in, we did a 50 basis point hike to open up, right? And then we did a 75 basis point hike in May. Was it? No, it wasn't. No. The first one was 25 basis points. Then we did 50 basis points. And then last one, we did 75 basis points, right? So right now we're at 1.5. And if we did a full 1%, that would put us at 2.5. But we're not. We're going to do 75 basis point hikes. So that will put us at 2.25. So if we're at 2.25, that much we can pretty much almost guarantee. They're actually saying 2.25, 66%, and 2.5 30. So there's still 33% chance that they do the 1% basis point hike. I think that probably is going to go down. Right. So then what's the next meeting after that? Well, if we're at 2.25, then if they do another 75 basis point hike, so let's go to September. If they do another 75 basis point hike, that would put us at 3 to 3.25, which is what the market is pricing as the most likely situation. For them to do 275 to 300, let's just do it in basis points instead of trying to do it in percentages, right? 32% chance. That would have to be that next meeting they only do 50 basis point hike, right? So if they were to do that, that would be, quite a bit lower than what the 10-year is right now. Normally, the 10-year is going to be a lot higher than the federal funds rate, but that's just how flat the curve is, right? So that's why I'm kind of like, okay, they're probably going to sell it at 3. So when I came in and I saw that housing number, I said, oh yeah, that's a reason to buy, because they are going to back off. Even though the ECB has kind of created this one flow, I think it's probably going to go this way. Now, this move that we just saw here, up to the highs, there was some good volume in it in the 30-year, but overall, this looks like still a very light and illiquid market. So I don't know if I can read too much from that big move up. Like I'm tempted to go like, oh yeah, giddy up, let's get on. We buy this, maybe we'll see 16, 20, etc. It's possible. But given the situation, move like that could be just somebody sneezing. So it's really hard for me to make a judgment on whether or not that's going to continue up. I had to check. I've got all my DOMs on 40 milliseconds update interval, and I never changed it because no need, really. Yeah, if you're so the thing I would say, Oliver, is like when it's like FOMC day or it's non-farms payroll day, right? Do you get any lag? Like put up your if you press on Windows Control-Shift-Escape and you get this task manager thing here that pops up on your screen, and then you go over to the performance tab. Okay. So I'm using a lot of CPU that I probably shouldn't be. I got other things running. Okay. But if you're doing that and your CPU is going to 100% during those kinds of situations, then you're going to want to make that value higher, right? You could justify getting it as low as like 5 though. Right. I probably wouldn't do 1, but I think you could justify having it as low as 5. And I really like the way that it looks when I have it at 5 and you have good data, but my computer can't handle it during the most busy markets. So there's so many little settings in Jigsaw, I have to say. You don't realize it until like you have to rebuild your workspace. And then you come in and you're like, oh, okay, so what are some other things? Momentum tells, man, if you're trading in the E-minis, you really want them momentum tells for sure. Those are really useful. Another one is like in is it the trade column? Oh, it's not in this one. It's in under trading. Under trading, reduce smart queue font. I find that useful because then when you put an order in, it's a lot smaller. So you don't have to make your column huge. Otherwise, you just don't have enough freaking space. Never do I get any lag, so I didn't check my CPU usage, but I have to look next time on such events. Yeah, well, I mean, the reason why you have to track the CPU usage is because a lot of the time during events like that, your data will lag. Both CQG and Rhythmic will reach their limits. Over the past week, both the CQG and Rhythmic have had reported problems from people both in Discord and all the other places that I checked. They both had problems this week. There's always going to be a situation where there's more data that they have to push out than they have the bandwidth to do. And they have to start aggregating and everything. So that's why it's useful to watch the actual performance metrics on your machine so that you have a better idea of what's going on. Who's the culprit? For me, though, when I have a problem, I think it's more NinjaTrader, because I have a lot of expensive computations going on over here that, probably get computed too often. So you say CQG is more stable? Yeah, I don't think that since I've had Continuum, that I've had like a straight up disconnect. What CQG will do to me though is like the connection will just like randomly reset for no reason. I don't know what the deal is with that. I suspect that it might be something to do with NinjaTrader, but I don't really know what's going on. You really only have your DOMs? Oh, okay, yeah. See, if I only had Jigsaw open, then it'd be no problem for me for sure. I'm really thinking here. So like the thing is, when I look at my workspace and I've evolved over time, I do really like my where is it? Over here, my inventory cost basis indicators. Okay, so here it is on ES. So you can kind of see how like they can run along this. Well, let me give you an explanation of what it is. This is like the most advanced indicator that's provided in my indicator suite. And it's based off of some stuff that was really popular in a Futures IO thread. I programmed it up and added a couple of my own enhancements to it. I think that it's definitely interesting. Okay. The thing is that past data doesn't necessarily predict future data. Okay. But it does give you some interesting things, right? So when you look at this chart that I have open right here, just you look at how the price reacts to the lines, right? Well, they busted through these lines, but then when they decided to come back, they came to the blue line and they bounced. Okay. So what is it? Well, basically it's trying to estimate average market maker positioning. So if it pretends like there's a market maker that is absorbing all, that is basically responsible for all limit buy contracts, and another trader that's responsible for all limit sell contracts, and he will take profits on those contracts the first opportunity that he gets. So this blue line is kind of like the buyer's average price, and this orange line is kind of like the seller's average price. And then they're making profits all along here all the time, right? So at what point does price move so far against them that they're losing money even after the profits that they've made up on it, right? And that's what this dotted line is. So you can see it's like possible for them to push through the dotted line, but they can't stay above it forever. And it's very frequent that they're going to come down to one of these average positions and bounce. You'll see this happen all the time. I think that you still want to have something that predicts future order flow, but especially in the E-mini, this seems to be a really good way to kind of figure out what people's positions are and make a little bit more short-term tactical decisions, right? That's the thing that like, it's computationally expensive, because it has to basically go through and say, okay, so for every order that was filled, like how much profit did they make on it, and do that whole calculation. Now I add it to these charts down here. You can see it works on the treasuries too. The problem that I have is that if you put it on all three of them, you'll find that it doesn't match up on all three of them. It's like one of them it will be bouncing off of, and the other two it won't be. I don't want to have it on all three of these charts, so that's just why I have it like that. I find this a lot more useful on the E-mini than I do on the treasury. Okay, so I have that. I have my spread indicator. So here's the spreads that I have. This is just a simple version of the spread. Maybe I should switch that one over to the candles one, my new and improved candles. Okay, here you got the spread. That's really, really useful, because especially when you're watching the treasuries, right? You need to know which way the spread is going so that you understand why it's absorbing the way that it is. Otherwise, you might misread the volume, right? I also have this little thing over here, these market depth tapes that alert me when large orders have come through. Oh, that's not a very good example. I would come over here to this other screen. Like this one right here in the treasuries, I can see where there were large stacks and pulls at places. Okay. And you can adjust it. I think that right now I have it really low. Yeah, only 150 to make it tick up and down. Oh, you know what? This one is not. This one should be ES. I wonder why it's not like that. This one's supposed to be ES. Properties. Oh, maybe I have it backwards. Oh, I do. That's funny. This one is supposed to be ZN, and this one's supposed to be ES. Okay. Well, anyways. It'll also make a sound so that like when there's a large stack or a pull out there, it'll click. And you know that something happened and you want to check your dump to see what it did, right? Those are like the three things that I use, right? So I'm trying to convince Jigsaw to go in and make me a simple spread indicator. This market depth tape thing is it's something for me. I don't know if they'll ever do it. They're not going to do the inventory cost basis bit, right? But I find the inventory cost basis most useful on ES. Right now, I'm focused entirely on treasury. So I'm thinking when I get my data switched over here and everything, that I start using the Jigsaw charts more as kind of how I'm leaning. Kind of leaning towards eliminating NinjaTrader right now. Various reasons, but one of the things that's disappointed me with NinjaTrader recently was that I was primarily relying on NinjaTrader for doing like the algorithmic trading and stuff, and to do any kind of auto trading on the micro 10-year, their simulator basically doesn't work, and I can't test it. I can't test it because it immediately thinks that it's always filled, which is just so silly and dumb. And they could fix this really easily, and they just don't want to. So that was one of the things that kind of made me say, well, if the main reason for me to use NinjaTrader is for the automated strategy sort of stuff, and I can't use that, then what am I using it for? Maybe you can try and run it on a VPS so it won't take up CPU usage. I think that at some point this year we need to build a new machine. I'm waiting right now because I think that in the fall, silicone prices could be a lot cheaper and we'll have like, a new video card out and everything. Then maybe I'll upgrade. And then I'll probably have a lot more CPU. One of the things is that OBS is taking up a little bit of CPU. Just because it's an older card, I don't have the newer encoders and stuff like that. Seth, is there a course on spread trading with the DOM? I have never found a course that provided adequate information on spreads. So I don't know. I think that the way that most spread trading works is something like this, though, Sam. This is what I know so far. Actually, I can show you. Our studio. So one of the things that we were doing, it was like exporting data so that we could get like a better view of like the 2 and 10 year spread, for instance. Good morning, D. How are you? I have to say, by the way, the treasuries, remind me later. I've never seen a course that was like focused on spreads. I've seen courses that like mention them and like they talk about the mechanics of them, but the whole thing is like, okay, but when do you actually want to take a trade in it, right? Okay, so I think that all I have to do is this bit right here. That's not it at all. My data spread. Maybe just do that one. Oh, I see why. Okay, hold on. I have to go to a different location. Oh, that's right. That's right. Our projects. Okay. Now it should work. Yes. Okay. Clean the data up and plot it. Okay. So now you got this thing. Can I forget how to? No. Zoom. Is it the zoom? Yeah, there you go. Okay. So here we got a chart of the 2 and 10-year spread. Okay. And what you might notice, actually, hold on. Hold up. Oh, yeah, that's because I don't. Okay. Let me do this again. If I don't clean up the data. Okay. So what I notice about this 2 and 10-year spread, and this goes all the way back to like 1980, right? Is that there are very long run trends in it, right? Especially when you go back into normal times like this right here. Very, very clean, right? Went down, went up. They're very clean. And then even in this, it's kind of been down. Then there was a 2020 thing and now it's down, right? Okay. So when we get steepening again, it's going to be a strong trend all the way back up to here. So you have to know which regime you're in, which is kind of easy to know based on what the Federal Reserve is doing with interest rates right now. And then you trade when there's a deviation from that. Now, the issue with that is that you get these things, like especially like this nonsense right here. Okay. You can have deviations from the trend that are persistent. But generally speaking, if it's flattening, it's going to flatten all month. Right? Interesting to see the z-score on that spread. We could do that. I don't want to go look up the function right now. Actually, yeah, I do. Actually, I do. Now that you said it, R z-score. I could calculate it myself. Maybe you do calculate it yourself because value minus mean over standard deviation. Yeah. Anyways, so I think that you want to see what the trend is and then do a plot of like price compared to that mean, right? And there are from my understanding, some significant mean reversion properties of it. So you can try and trade it when it gets too far away from that mean. So I think that's the general gist of how you do a spread trade. But I think there's got to be more sophisticated ways of determining when you want to get in and out for spread. I mean, in terms of mechanics, it's like, especially here for the micros, it's like, well, you buy one and you sell the other. You buy one contract here and you sell one contract here. If you think that we're going to flatten, then you want to buy the 2-year and sell the 10. Easy peasy. Right? That means that the 2-year rates are going to come up faster than the 10-year rates. Flattener. It's just like tactically, I've never seen anything that says, okay, well, here are the sorts of situations on this particular instrument that make good entry locations, right? They never want to give you an actual trade. They always expect you to do that part yourself. You get some good trades just there off of the open and the E-mini, dude. NASDAQ killer. Yeah. Anyways, I find so here's the thing. I don't think there is very much information about spreads. Like there seems to be plenty of people out there that are aware of them, but I don't think that very many people in the public are actually putting them on. I think that the majority of the people that do this are big institutions. It's kind of like the old school co-integrated pair sticker trade. Yeah. Yeah, I think that you want to, exactly. I think that you want to do a kind of analysis similar to what you get with a pair trade. It's some form of statistical arbitrage. I thought it's similar like the way we trade. So like here's the thing. If we have a big news event, let's use today as an example. I went long because the housing numbers weren't very good. They weren't terrible, but they weren't very good. And so that means Federal Reserve is going to do a 75 basis point hike, and that means that the treasuries can't really sell down much further. Okay, so I want to come in here and buy the treasury based off of that, right? Why would I do it in a spread, right? Well, for a spread trade is a lot more persistent, right? So spread is a lot better for like a swing. It can hold a spread for a really, really long time. But like on a short-term move like that, like on the news, I often find that trying to predict what the spread is going to do is really hard. Like predicting what it's going to do in the very, very short term is kind of hard. So I could be wrong. I've never done it. But it seems to me that it makes a lot more sense to take a spread trade when you're taking a longer term view. Because when you have a longer term view about what the Federal Reserve is going to do, then trading those spreads is a little bit more advantageous. Because again, they're more consistent, right? Or you're finding a statistical aberration in it. And presumably there should be a lot of opportunities for that because of the nature of a spread. You know, they don't completely follow each other all the time. I don't know. My mentor told me that there was this guy that for a long time had a room where they only traded spreads in the treasuries, and that room had gotten really, really large. And I'm sitting here like, what were they actually teaching them about spreads? But then one day he blew up and the whole thing disappeared. So I don't even know who it was or what they were doing. With pairs and spreads, you get a ton of nights with no sleep worrying if it will ever come in, too much emotional capital wasted. Well, I had one opportunity where I really thought that the treasuries were going to steepen, and they didn't. Right? Like they did for a little bit, and then it came back, and I took a much larger loss on it than I should have. But like I see the potential for spreads. I'm trying to do some research. I really wish that there was like a book on the subject. It seems to me like the kind of a subject where you should be able to have a whole book about it, but nope. So then you're like, oh, well, I bet you there's a lot of studies on it. I can only find like really one very good study about it. And the one study about it kind of suggests that there's not a lot of opportunity out there in doing it, which can't be true. I mean, like so much of this volume is very clearly spreading, right? So they're doing it for a reason. Presumably, though, a spread trade should provide you a trade that is more consistent winner, but when you do lose, it can be a bigger loser, right? But I haven't figured it out yet. If you know how to do it, send me a private message. Have you looked at the move versus SPY lately? Not lately. So the move has been really interesting lately, right? It kind of looks like it could be coming off, though. It looks to me like the interest rate volatility is going to contract. Yeah, pretty much with all mean reverting strats, you get those portfolio strats. Yeah, I was talking to one guy because he was looking for somebody to do a spread trade. I don't think that I was the appropriate person for it. I think he messaged me thinking, "Hey Seth, you want to do this?" I don't think that I'm the appropriate person to do that. I got other stuff going on during the day, unfortunately. So I'd love to do it otherwise. I don't really. He said, "Well, all spread traders are kind of like basis traders, anyways." It's like, oh, okay. Because a basis trader, the way that a basis trader works is, while we keep talking about this, I'm really interested in the basis trade, right? Is that, say the value of the treasuries go down like this, the whole contract, the basis will start, a little bit above it usually for futures. And it will actually kind of widen a little bit. And then eventually by the expiration come back down to zero as it expires. So the basis traders, they come in here and they say, oh, okay, this basis is getting way too big. So I'm going to take a trade and fade it. They're all going short the basis. Because the problem that I've found for basis trade, right, is that during periods of high volatility and uncertainty, the basis increases. I've already seen that just from watching it a little bit. So, like if there's a Federal Reserve meeting, you probably don't want to go short the basis just before the Federal Reserve meeting, right? What you really want to do is you want to see during the Federal Reserve meeting and the basis gets really wide and put it on then, right? Tough to do that, though, when it's being all crazy, huh? It's near its 2020 highs, or well, I would expect it to be near its 2020 highs, but I'm anticipating that I'm anticipating interest rate volatility to decline over the next month. In other words, well, maybe I should do that. Maybe I should go and put on if I could put on a short for maybe $100-200 on move, I think I would. I don't know if I actually feel that confident in that trade. There's still some things that could happen. Today, the volatility was, yesterday was not very good for trading during our regular session. Today, I would say has been even worse to some extent. We still got an hour left, but I'd say so far today has been worse. Could be like yesterday. Yesterday, like the market actually moved really well after we left, right? Earlier when I was, just kind of browsing around on Reddit, I opened up this thread on a Forex subreddit, and I'm like, why did I click on this? This is just reading this stuff just is so frustrating to me. Just how disconnected retail traders tend to be from what professionals tend to do. Can I read you something really cool, actually? Ooh, new Corsair Xenon gaming monitors available now. Let's look at that. I always want to look at monitors. It is summertime. Yeah, and the whole thing is that we've had unusual interest rate volatility here for the summer. It does look like it's finally died down, though, and that it is getting back to typical summertime trading, which is really crap, right? Which is really crap. They have new gaming monitors, but there doesn't appear to be anything all that interesting about them, nor do they appear like they would be particularly good for what we do. There was like super small bezeled ones. That's probably what we want. Okay, what was I going to say? What was I going to... Oh, yeah. This post on LinkedIn. Oh, my gosh. We can find him again. Okay, so there's this guy on LinkedIn. I'm not going to put the name in because I don't want you all going in and flooding his LinkedIn page. Okay. But there's this guy who is a trader at Cargill. Cargill is like one of the largest, if not the largest, commodities trading houses, right? Yep, we have a Discord that's in the video description. So he says, I am receiving a lot of questions about how to land a job as a commodity trader. I will spend a couple of posts on this topic. What am I looking for in a candidate? The easiest thing for me now, and maybe you, is to provide a list of competencies or requirements to have a chance of landing a job as a commodity trader. I will do that in later posts. Let me focus on the very first thing that comes up in my mind looking back at candidates I have hired over the years. Most came from a modest background. Oh, this isn't the post that I wanted to read. I mean, that's something that we've always said, right? But that wasn't the bit that I wanted. Okay. The biggest chance of being happy and successful in your job is when you have a natural interest in what the job is all about. In interviews with candidates, I look for their natural interest and behavior to facilitate that I create an atmosphere of equality quickly to have a conversation as if we are already team members. Preparation for a job interview is important, yet too much preparation can prevent genuine discussion if it leads to scripted answers and exposes the inability to deal with things which are not prepared for. Successful traders prepare their trades very well through a rigid, in-depth analysis and debate with their team. But how they deal with unexpected events has a big impact on the final outcome of their trades. So you see what he's saying there? He comes in and he says, here's what we know about the markets. Here's what we think the future orders are going to be based on what we know about the markets. And then as they have the trade on, they react to what happens because it has a big impact on their trades, right? No, it's not Michael Baltos. I've never heard of that name. You know what? There's only like 12 people in here. It's fine. His name is Margin Braun, global head of trading at Cargill Cocoa and Chocolate. So he trades cocoa and chocolate, apparently. And he's Dutch, too, by the way. So, but he had some good posts. All right. What I look for in candidates in a trading role is a natural interest in financial markets in the broadest sense. I give 2 examples of questions to discover this natural interest. The second I am famous for among my interviewing peers. Question number 1, do you invest or trade for your own account? Any answer provides a huge amount of information about the candidate. We can or cannot talk about the many things which relate very well to a job on the commodity trading desk. You cannot fake it, and you will be talking very naturally about your experiences. Experience does not require preparation. I've spoken to many crypto bros and sissies with great pleasure. I assume that means that he enjoyed talking to them because they were actually trading, but I don't 100% know what he was going in there. But pay attention to the second one here. My favorite question we always look forward to, as it is so simple and effective. Martin, raise the question, my peer smiles. What is your view about the Fed policy? Fed policy has impacted markets and economies for such a long time. If you have an interest, you have a view. This question tells a lot on how candidates react to an unexpected situation, whether they can improvise, analyze, are quick on their feet, and cope with the stress. Most importantly, it is one of the ways to figure out whether someone has a genuine natural interest in financial markets. If so, no preparation is needed. They will tell me enthusiastically what their analysis is and ideally how it impacts markets, the global economy, and the specific commodity trading job they are applying for. There's no right or wrong. I've learned a lot from myself from having conversations with candidates who impress me with their analysis, eloquence, insights, and enthusiasm. To candidates willing to apply for a trading job, I recommend thinking about the balance between your need to prepare and being energized and engaged about financial markets. So having the natural interest and behavior required in a trading job, right? So remember, again, we keep coming back to this thing, like so many retail traders take the position that they want to know as little about the market as possible. They just want to watch the chart and take their trade. And that is not how professional trading works. Professional trading, they analyze the market, they come up with a thesis, they argue and look for pieces of information that support or reject their theses, and that's how they make money, right? And being an informed trader, gives you the best chance of being able to predict the future orders. D, one of your indicator sets is called volatility projected range. Seems to work really well. Hopefully you can do another video on it. So what would you want me to put in that video, D? I tell you what, I really like the volatility projected range. I really like it on NinjaTrader, but most people do not get volatility index data through NinjaTrader, unfortunately. So that's why we have it on TradingView. But I'm not really too sure what else I would say about it, A volatility tends to be a really good predictor of, what the future volatility is going to be. But when it's wrong, like it's dead wrong, So it's kind of like if you trade off of that thing, essentially what you're doing is you're just always short volatility, essentially. This is really what that indicator is all about, is where would you go short volatility, right? As your only video on it was too short. I don't know. You'd have to be more specific on what kind of information you think I could give on there. To be honest with you, it's a piece of information that I haven't looked at too much because, again, I'm not so interested on the E-mini these days. So who was this other guy you were talking about? Ooh. I think I found the guy you was talking about. Hmm. He seems like he's active, but I don't see him doing anything. Yeah, I don't see anything specifically interesting to me. I really like LinkedIn though. Like it's really great to connect with somebody and just add them and say, oh, well, I'm interested in this market. You guys are professional, so you know a lot more than me. But it's just like, it's hard to find people that are into trading, right? And nothing is better than commuting with your what is the word that starts with a C? Being with your people in person, because we don't get to do that very often. Back in the day, they were all there on the floor on the CME. They all had that experience. Not anymore. We're all just a bunch of random people on the internet sitting in a room by ourselves, and all our family thinks we're crazy because trading is crazy hard. It's a lot of work for me. That's 2 hours. Look, I do this 2 hours every day, right? That's 2 hours I could have spent like studying for a Series 65 exam or something like that. That's probably what I should do. I probably should pull up. But if I was to go through the note cards here on stream, I don't know if that would be okay, because that would be sharing their content. Are you still an active trader? Yes. I'm not taking any trades today because this accident is crap. Plus, I'm also switching brokers at the moment, and they haven't completely finished moving me over. I thought that they were going to activate me yesterday, but they didn't. They gave me like, oh yeah, we got the funds and everything, but they haven't actually set me up. I think that what's going on is the FCM that they use. I'm going to EdgeClear. The FCM that I'm using with them is the same FCM that I was using under NinjaTrader, and so I kind of have an old account at them, and so I think that them trying to start a new account with the same email might be causing some problems. But when I take a trade, Sam, it's usually like, 1 or 2 a day. Usually when I'm taking more than 1 or 2, I'm usually on tilt, And I've actually been doing really well with the micros as well. I have lost money on that NinjaTrader account, largely because of the data fees, right? And a few experiments in like the less liquid instruments that I shouldn't have done. But all of the little trades that I take on the 10-year here on stream have gone really, really well. Really, really well. It's really just enough to pay for the data fees most of the time, but maybe eventually we'll size it up. I have to say though, like from the perspective of the channel, trading, I really enjoy trading, but trading is not everything to me anymore. You know what I mean? How can people trade ES? For me, it's I have a hard time trading ES. I honestly think that most of what's going on in ES really is just noise. And then most of these traders that are trading ES are just kind of gambling. They're just taking on excessive risk. I don't know if you can really... NASDAQ trader is going to argue with me about it, isn't he? He'll be like, no, Seth, you can totally trade NASDAQ and stuff and do really well with it. But the thing that always bothered me about ES is I would have periods where it was just like super awesome. And then I'd have a period where it was just like absolutely dismal. Like the whole week, it'd just be absolutely terrible. Now I have streaks and stuff here in the treasuries, but I'm finding it's a lot easier for me to get on track, especially with me, the amounts being small. And I think I'm getting a little bit better at recentering myself when I have a bad trade and being able to say, well, I had a bad trade. It's really upsetting me. I should probably just stop trading. So I'm getting better at that. But like I have to say, like what I'm starting to learn about myself is that, well, number one, I was probably attracted to the trading because of my ADHD. But number two, I enjoy the market itself more than I enjoy the trading, actually. Like to me, trading, the primary benefit of trading is the way that it engages you with the market, right? The way that you pay attention to the markets so much more intensely when you have an interest at stake, right? So trading is a good way to keep yourself on the forefront of what's going on in the markets. And in many respects, I kind of think about trading micros as kind of a loss leader, even though I've done okay with it here. It definitely does not pay me back for the amount of time that I put into it. So in that respect, it's a loss leader. But in the end, I've saved and made a lot of money in other areas of my life because of what I knew about finance and everything from trading, right? And that is really enjoying to me. So a lot of people have the idea, I'm going to get better at trading and I'm going to build my account up. I'm going to build it up to $1 million and I'm just going to trade all day. And I think about that kind of thing, like trading all day for a living, kind of sounds like hell to me. doing this for more than like 4 hours, I think is too much. I think doing this for more than 4 hours is too much. I think that what I want to do is I want to keep trading for 2 hours. Is just I want the day job, instead of being a site reliability engineer, to be making content for you guys here on YouTube, right? It's just like, what is it that I got to do to get there? I'm not quite sure yet, right? One of the things is that, we do have some of these sources in the video description. Again, we have a coupon code for Jigsaw. So if you end up buying Jigsaw, make sure you use our coupon code because it'll give you $100 off. We have an affiliate link to Financial Juice. Everybody should have a News Squawk if you're going to trade, and they're the cheapest News Squawk. I think it's a really good deal. We have an affiliate link for that. We also have these mugs if you really just want to, support the channel. All of these things, because again, it's like, the more help that we get on that front, the more that I'm going to be able to help you guys out in the future by producing more content to help you, right? Because I don't want the trading to just be my sole source of income. I want to have income from the YouTube channel. I want to rely on that, and then have, trading is still kind of going to be more of a hobby, because really trading can be really inconsistent. You don't want your whole livelihood to depend on that. You need some style, some quirks, some cool looks, and an LED atmosphere. Well, I think that my videos look really good. I mean, maybe I'm crazy, but when I look at like other people in the space, I think that the look of like the background and the quality of the video and audio itself is leagues ahead of most other creators out there. Like, seriously. A lot of these guys still look like they're just in a cheap apartment, right? One of the things that really helps is having a good light. Like the blue lighting behind me really adds color to the shot. It's good, but it's a competitive environment. Well, but I don't think that those are the things that really bring retention. So like, oh, hold on, let's go. I really don't think that those are the things that are really make the difference in terms of like how big your channel blows up, Hey man, I'm sending them. Wait, what are you sending me now? Oh, that's right. He wants us to look at his wallet. Hmm. That only has $16 in it, dude. Some NFT or something? I'm not seeing it. I'm not seeing it. If we want to do that, we should like really. Oh, so he's got a bunch of them here. We really would need to like compile the information, right? Oh, okay. This one is pretty big. His pictures. Well, so yeah. Okay, so hold on. Man, they're really yapping about this natural gas terminal thing. Anyways, I don't know if that really proves the thing that you were trying to that you were saying. Check past transactions. Do I go to maybe it's history? Well, it has been in the more recent market. So I would really need to export it. But like how far? Well, so again, here's like the bigger thing that the bigger point that I was trying to make that day, though, that I think kind of went over our heads, right? How far back does it go? Right? I want to see like more than 5 years, preferably more than 5 years, and more than just cryptocurrencies, right? But I don't think that this really like here's the thing. So going back to what we were talking about a little bit earlier, man, I know Nasdaq killer. I'm gonna come back to it because I think you have some good insights on this. Okay, so this guy at Cargill, okay, he's like the head trader at Cargill, right? And he's talking about kind of the things that they look for in traders and stuff like that. You want somebody that knows enough about the markets that they have an opinion on what the Federal Reserve's current policy is, for instance, right? That's the sort of stuff that I'm looking for, right? What I see here is somebody that's been trading cryptocurrencies, but you know, it's just cryptocurrencies, and well, I mean, man, there's a lot. You have a lot of activity. I give you that much. You sure have a lot of activity. I don't think that you've been doing it for 5 years. You have to see. Probably this DE bank place probably doesn't go back that far, right? No, I didn't. And move the goalpost. The goalpost has always been 5 years. The goalpost has always been 5 years. Yeah. Yeah, the issue with Nasdaq killer is that I can see like a bunch of transactions, but I don't really necessarily know what they all mean. You know, like I'm looking at this. Oh, he had a contract interaction, so I'm like, was that he bought something? It seems like that might have been he bought something. So I'd have to sort out what each position that he had was, essentially to really do like the kind of analysis that I would like to do on somebody's trading. We'd have to do a lot of work, right? We'd have to make a spreadsheet that shows like each position, what they bought and sold at, how much they made. And then we would maybe have to correlate it with a chart to see what their favorable and adverse excursion was as well, to see how much risk they're taking on and so forth. Because again, there are some things that you can kind of get away with in the crypto sphere that you can't get away with in other places. And you know, cryptocurrency has a very fat tail to it, right? It's like you make money, and then 1 month everybody loses everything. I am just negative Nellies. I'm just the thing that I'm trying to teach you here, Hydro. Like, here's the thing. Here's the two things. Is one, I kind of do like to argue with people and put them down and stuff. Like, I'm having this problem because my stepson is having a couple of problems, and my natural inclination is just to be like, well, you know, stop, don't be lazy, etc., etc., which would really is not really true, and nor his problem, and would not make him feel better, you know. But that's just like, I'm mean like that. I think I've just spent so much time on Reddit. I just love arguing with people and all of that, right? So there's kind of that thing, but really what I'm here is to help you guys all. Is really the person that has the most value is the person that brings value to everybody else. The reason that you guys come here to this stream is because you bring value out of the stream, and then you all contribute, and that helps me become better, and then you all benefit from that in exchange. And that's how we built this channel into, I think, the best futures trading channel out there. I think that there's a lot of larger channels, but I don't think that they provide you with as much edge and information as we do. There's certainly nobody else out there talking about market microstructure, for instance, which is, you know, real empirical data. It's just kind of like people's general tips on, what sort of, there's these some channels. There's this one guy, he's become more popular in trading lately. He's like, here are the 5 tips I found to be successful, and they're all just like general trading tips that like anybody that's been doing this for 2 years would know. This is like, what the heck? So I'm trying to help you out here, Hydro, and the thing that I'm trying to impress upon you is that you seem to think that you're hot stuff, and nobody's hot stuff. Okay, there are people in the trading world that are hot stuff. I don't really know this guy very well, but I think you have to be a pretty good trader to be a head trader at Cargill. Okay, right? So he is hot stuff, but you notice he doesn't talk like he's hot stuff. He's just like, well, we enjoy the market. We want people that enjoy the market, right? The people that are really good at this, they don't really make a big deal out of it because they understand that even a whale is small in comparison to the size of the ocean, right? The reason that markets exist is because no one person has all of the information, right? And anybody that's been successful, if you want to continue to be successful till the very end, I would highly recommend remaining humble, because the markets always evolve, and they can evolve in ways that leave you clueless, right? And that means that you'll have to continue to improve to stay on top of it, right? Yeah, I don't work for you. Seth has it if he wants to calculate it. I don't have enough interest in calculating it though. Like I said, like one of the problems is that it's crypto stuff, and I'm just kind of like, who cares? If you were coming back and you were claiming that you had made like, well, I don't know what it would have been. Let's say 30%. Okay, let's say that you were claiming that on the 10-year treasury you were making a Sharpe ratio of over 0.5 across the 5-year period, right? Then I would be like, oh, you have to show me, and I'm going to be going through and figuring out every single trade that you took, and how you're doing it, and if it's really appropriate for me and everything. Yeah, you don't trade treasuries. I get it, right? Yeah. So I think we should just drop it, because I don't think it's particularly relevant, right? I mean, to the whole thing that this started from this was that you thought that the equity market's bottoming, right? And you said that last Friday? We're about where we were, aren't we? Had a pretty ugly day yesterday, but they're getting a decent upturn here at the moment. I didn't hear anything from my news squawk, but the treasuries did break the lows there. Nick Timmeros, in the New York Fed survey to primary dealers in early June, the median of 20 respondents attached roughly equal probabilities to annual PCE ending in 2023 below 2% as they did above 3%. That's curious. But just don't go around claiming you're one of the greatest traders of all time when it's all cryptocurrency stuff. I just don't think it's the same thing. I don't think that you have enough context about the financial industry to really. I don't think that any of us here really have enough context about the financial industry to really understand where we fit in the pecking order, right? Okay, so NASDAQ killer. We'll talk about the more useful thing. I don't think that the way that my room looks in this tiny little bottom corner of the screen really has a very large effect on the channel. In fact, I don't think that the way that my background looks when I do like a full video with me talking has a huge effect on the channel. I think that some things do matter. I think that having a decent video quality and especially having good audio quality does make a big difference. But I don't think that those are really the things that grow channels, you know. But you were saying, Matt always looks really good in his thumbnails, right? I don't think, I could be wrong, but I'm gonna bet that he has somebody doing his thumbnails now at this point. He's probably making enough that he would, if it was me, if I had a channel as large as him, I would definitely be paying somebody for the thumbnails at the very least. Because I'm not a graphics designer, and they do editing to it a little bit to kind of make him stand out. They've got the formula figured out. I don't think I've got the thumbnail formula figured out. I'm constantly frustrated by my ideas about what I think is going to make a really clickable thumbnail doesn't really get me above 5%. It doesn't really get my click-through rate. That would help. Right? Better thumbnails, more engaging videos, right? I think that Matt is probably a bad comparison for us. Like, it's kind of funny because in many respects, Matt is definitely like the most similar competitor to us because it's primarily a live stream, right? And then he'll make one-off videos. And I'm not too sure how consistent he is on his one-off videos, but most of his one-off videos are recorded from like the same setup that he records his live stream, right? But the way that I want to build my channel, I think, is just fundamentally different from the way that Matt grew his channel, right? Because Matt grew his channel from like, I did really well in ES. You put the number up on the thumbnail. People want to click that. And, you got this group of people that all want to trade the E-mini and whatnot. And like you can tell, like, I don't like that. Like, it's not that I don't like Matt. It's just like that's not the community that I want to have, right? Because I kind of feel like most of what you guys what they're doing in the E-mini is kind of random. That a lot of what it is just like taking on a risk. And I'm more about, I want to understand the market, right? So for me, I want to build the channel by broadening the audience, essentially, and still providing really, really detailed, informed analysis about the current state of markets, right? That's kind of the direction that I want to go. In other words, more videos about fundamentals, essentially. We're going to start with talking about how do you trade the treasuries, right? What do you need to know about the treasuries to get started trading them? I think it'll be valuable videos. They did finally touch 118. Well, so what do we think about this decline that we had here in the treasuries? Let's say it kind of started out of nowhere. There wasn't any news, was there? I don't think that there was. There was Governor Bailey speaking. Let's see here. I might need to go back 30 minutes to see if I missed something. Bunch of stuff about China. Nothing about central bank policy or anything. What about the dollar? What's the dollar doing? Well, this decline was definitely accompanied by a significant move in the Japanese yen. And there does appear to be some key inflection points around the dollar as well. So it could have been some of these headlines that we're getting about China and so forth. Kind of curious. Yeah, plus he shows his losses and wins loud and clear, and that causes interest because people want to see money. Yeah, well, like that's exactly the whole thing. as is kind of like, if it's all about attracting people with the lure of how much money they're going to make from trading, and that's what it takes to become popular for live streaming, then I don't want to become popular live streaming. I want to keep it to the people that are interested in the market for the market's sake, right? People that are, going to trade treasuries and want to actually know what's actually going on, instead of, focusing on some chart pattern and stuff. It's a risk arbitrage. There you go. Exactly. I think of that. That's kind of what it is. You need a hair and makeup girl. I think it would be really fun to have like, well, like, here's the thing. I really like being bald. I do. If I put on, I mean, it would be interesting to put on a toupee and see what I will look like, but I'm gonna guess that I prefer the way that I look bald. But I think it would be fun to change it up all the time. That's the thing that I think would be fun is variety. Come in every day and have a person that is going to decide what your hair is going to look like that day and have it be different every day. That would be fun. Right? But anyways, so like when it comes to building the channel, like what is it that we need to do? I can tell you. Here's my 3-pronged plan. Is it 3-pronged? I know. Number 1, Seth needs to do a better job of informing his audience about the things that we offer, why you should be watching, and why the affiliate links and stuff are beneficial to them. That's the first thing. Number 2, Seth needs to post YouTube VODs more regularly. I think that we're at like every other week. Sometimes we haven't been every other week. I would prefer to be every week, but I don't know if I can actually pull that much content out at the current time. But I need to be more consistent. If I was posting every week, the channel would probably be a lot larger, and we'd probably have a much more consistent audience. Okay. And number 3 is I need to just create more content in general around TikTok and work harder to try and bring that audience over here. Not necessarily into the live stream, but over to the YouTube. Like I really envision a day where like the channel could be, 50,000 subscribers, and I could be doing this full time, but the stream still be relatively small. So that's kind of my thinking. But y'all have different ideas. So Jack yesterday was saying, you should make adjustments. You need to stream on Twitch. Rethink how you approach things. Well, I don't understand how you'd approach things. I'm going to bet that the way he'd approach things would kind of be some of the things that we talk about. I don't understand how streaming on Twitch would make a difference, to be honest with you. I don't know how doing it on Twitch would make a difference. To me, Twitch is a dying website. Rather, on the streaming side, we're better off sitting here on YouTube and hoping that YouTube makes their streaming better for us. They're losing all of their they're losing their audience over at Twitch. They're losing their streamers, and every decision that they make over there is a bad decision. This is an app that I think is on the downturn, and the company knows it, and so they're just trying to squeeze as much money as they can out of it before they have to kill it. That's what I think about Twitch. Because we know you're going to lose. It's, like NASDAQ killer, you can see my frustration, right? It's like when people have made money, especially in the cryptocurrency sphere, and they've made a little bit of money, They think they're geniuses, and there's literally nothing you can say to them that's going to convince them that there might be a problem with how they're trading, right? That they might not be as awesome as they think they are. That the person that does that is a person that generally is willing to take risks and probably, frankly, irresponsible risks, right? That's not the kind of person that you're going to be able to convince is doing something that could blow their account at some point, or that, even if you say, oh, you are trading pretty good, you're not quite what you think you are, though. It's a nest of snakes. Well, it's just because Hydro, any person that comes in here and is not humble, like, you notice that the people that are like making the most money that come through here in chat are, they would never come in and say the market's going to do this because I'm always right. In fact, they very much avoid making grand prognostications. And why is that? It has to do with the nature of the market itself. Okay? Even a whale is small compared to the size of the ocean. The reason that the market exists is because no one person has enough information to correctly price these assets on their own. There's thousands, tens of thousands, millions in some assets of people involved in these instruments, and they all have a little piece of the puzzle. And the amount that you know compared to the amount that there is out there to actually know is super, super, super tiny. And the people that understand this are the ones that are, in the long run, are the most likely to be successful, because otherwise you're just going to get chopped up by noise, right? People that understand this are going to understand when they should trade and when they should not. And the people that don't are going to take every random trade that their specific, bar setup gives them, and they're going to trade in all sorts of, unadvisable action and get diced to pieces. So that's why we talk about it. And when I see somebody come in that talks like they're the hot shot, that's an immediate red flag to me that they're not actually what they claim they are. So in this case, I don't know if I don't think that you're a 16-year-old kid. You could be young. You're probably young though. But it's probably more the case that you've made money in this last Bitcoin set of cycles. But I don't think that you're actually as amazing as you think you are. That's not intended to like tear you down. It's kind of like a warning, like, you've done really well, right? You don't want to lose it, right? You want to be able to build on your success, not lose it all and start over, which is what most people do. The way that you talk suggests to me you haven't learned that lesson yet. What are you saying? Live action except me? What? I am really interested in how the treasury's like really bombed down here. I don't see a fundamental driver for it. It could just be here again that we're in like a very illiquid market with not a lot of reasons to trade. Somebody had a reason to sell it. We don't know what it is. Their impact was more dramatic than it would normally be. I guess it was a net change of around 15,000 contracts, which is a decent move though. So Just look at how far it comes. I'm always the smarty pants here. Well, you do like the thing is I it comes down to like the ego, right? I the one of the things that I really like is when people stick to facts, right? Is if I say something that is like objectively wrong, they can go and find a piece of empirical evidence that they can show that suggests that that's not the case, right? That's what I like to see. When I'm having an argument, when I'm like, so like there's this one guy, oh my gosh, there's this guy in TikTok that responds to my TikToks a lot. And so it shows me his videos. And when I see his videos, it seems like one of these guys out there. Like it seems to me like he's read a lot about economics. He's so laser focused on this one issue that really doesn't have the importance that he thinks it does. He thinks that we're going to fix this one problem and then the economy is going to be fixed. And it's not the case. So he thinks that we need to have a more progressive tax system and that the rich and corporations need to be taxed at 80% or whatever the deal is, right? And the problem with that is that we used to do that. There's a reason that we don't do that anymore. And part of it is because at the time they didn't feel like it was working very well. But another part of it is because the rich don't want to be taxed 80%. And the system is basically, set up in a way that you can't be taken that much from one particular group and have that policy last around for very long. Eventually somebody will get in charge and change it again. You're just never going to be able to keep it that way. So it's kind of like a futile policy, especially to base everything on your policy. So anyways, yesterday he's making this thing like we're going to go into a depression is what he's saying. And I'm like, I'm sorry, but you can get lucky and predict a depression sometimes, maybe. But I don't think that anybody on this planet right now is really so smart that they really understand what's going on. We, quite frankly, do not have enough data, information at this point to really understand what's going on. Because all of the tools that we typically use are giving us all sorts of mixed signals. And the underlying economic situation is changing quicker than we get the data. So nobody really truly knows what they're doing, and anybody that thinks that they do is fooling themselves. When I look at the people out there that really understand what they're talking about, they're not making such grandiose predictions. I mean, they might have a feeling about which way it's going, but I still see it an acknowledgement that there's only so much we know here. What would be an appropriate stop for ZN? I got stopped out on my short before the move lower. So you were short and it stopped you out before it went? That really sucks. Yeah, so live action I think has a good starting point that if you want to have a relatively close stop that's not just going to like straight up blow out, you'd want to have it to be 4 ticks. I think that in the volatility that we've seen in the treasury market lately, that you might have to risk more than 4 ticks, unfortunately. The reality is that the larger your stop is, the better your potential upside reward is. But you have to have an actual real edge in order to do that, right? In this particular instance, I don't know how you would have predicted that down move. That's a good call if you were short, but I don't know how we would have 118 9.5. Oh wow, yeah, that is a really good one. I can see where you did it, or it was like it was kind of going down, and then it bounced back up, and it was there for about 10 minutes, and then it finally dropped. Yeah. That's just kind of the way that it goes, though, right? Like that's why I say, in that kind of an instance, I've never been able to find something where I go in, program it up, and like, here's some formula that you use for how big your stop should be that will, magically make things work better, right? there's some strategies about when to bail and when not to that can potentially increase your profits and everything, but the net effect of them almost always means increasing the amount of risk that you take on. That your largest winner is, or sorry, your largest loser becomes larger in general. So I think that for us, for the sort of thing that we're trying to do, the better solution is to just get better at timing it, right? If we are expecting a downturn and the last move up that we had was a 715, 720, we should expect that maybe we could sell sometime after 8 o'clock, maybe going into the kind of the mean reversion period that we tend to get between 8:15 and 8:45, right? So you might be able to time it better. You could say, okay, at 8:15, I'm expecting to see an order, and now I've seen them break out of the bottom of the range and I'm seeing more pressure, and then maybe I would be able to jump on. So in that instance, you might have lost. You might have gotten the lower price, right? Like you might not have sold it until like 06, and then you could have taken 06 to 117.30, right? But that's still a good winner, right? The difference between here and here, right? So we maybe could have timed it better. That might have helped. My stop of 2 ticks was too tight, I would assume. Oh, yeah. Yeah, especially in this market, 2 ticks, you're really likely to stop out. Really likely to stop out 2 ticks. But again, the thing that I would ask is, why do you think that move happened? Right? So they sold about 15,000 contracts or so. But why? Right? What was the driver behind that large meta order? There could have been a piece of news that I missed. I've been really yappy these days, so I've been missing a lot of important things. And sometimes there are important things that come out that we don't see on Twitter, and we don't find out that they were significant until like the end of the day when Zero Hedge tells us, right? So it could have been that. But if we didn't have one, was it really that good of a trade? We need to have something that's we believe is going to predict the future orders, right? Then all of our technical stuff is to try and help us select a better price. Now, 09.5 is a good spot within the liquidity hole for sure. So I can tell you that you're definitely trying to do it right. Yeah. Two ticks is probably too tight in the 10-year right now, though. Like when I'm trading the micro 10 years, right? I'm usually doing 1 or 2 basis points. And I usually put my stop so far away that there's like almost no chance that it will ever get hit. Oh, it's rough. I have to say, like, this is one of the most frustrating conundrums in trading. I feel like there should be a better answer to it, but I don't think that there really is. You would think that there should be an optimal way, an optimal risk management stop strategy, right? And I really don't think it exists. Oh, okay. No, that's actually not a bad trade to take it. But he was taking it based more on a correlation. Was when he saw the S&P 500 take off. But he went into a little bit more detail about it than that. That's actually interesting. So do you have an indicator that's showing you that? No, I have all these tabs open still that I probably shouldn't. Oh, just watching the two DOMs next to each other. I got you. That could be. I mean, I think you might be right. I think that may be why they did sell was that there was a little bit of a buy. If we come over here to the E-mini on the open, actually, let's not do it on the 5-minute chart. Let's do it on the 1-minute chart. So here's the open. It was a little tough. We got a good move up here, but then we really started to see a little bit of autocorrelation come in right here. Here you can see now we're really highly autocorrelated in the S&P 500. So for whatever reason, the S&P 500 has turned risk on, and that suggests that you'll see selling in the treasuries. So in this particular situation, that's probably about as good as anything. Personally, though, I'm happy that I haven't taken a trade today. For me, it's probably a potentially good trade. But the other thing, Jacob, is that you're probably going to get stopped out of a lot of good trades, and there's going to be a lot of trades that were bad that you get lucky on. That'll happen to you too. I think that as day traders, we really try and strive for perfection, because it just feels like that's to make money. That's what you got to do to compete with the robots. But our expectations are usually unrealistic, right? Our expectations are usually unrealistic, and you probably are going to stop out of a few trades. Although I personally would have a really hard time trading the 10-year with only a 2-tick stop. And now John Grady will trade that. He'll have a stop that is literally if he were to catch the edge at 118 and buy it there, and it's bid at 118, and he'll have a stop at 31.5. No joke. But when he's looking to make those trades, from what I can tell, he's seen something that he thinks is going to make it trend immediately. So if it's not going, he's getting out immediately, right? In other words, he's not taking that trade unless it's, when we come over to the chart, he's not taking the trade unless it's right here. He's going to see that sort of thing happening, and it's going to go lower, and taking it there, and then just riding it as far as it can go, and trailing it behind him. He'd probably get out right here. Is from the things that I've seen. He trades it very, very close. Yeah, I thought it would have worked out with a bigger stop due to the volatility. You just thought it would have gone smooth. Yeah, so from my perspective, informed trading will tend to require a little bit larger of a stop. And in an informed trade, I think that where you want to limit your risk is in time instead. So you really don't want to be in a trade that is unprofitable for very long, right? Because if we time it right, it should just go, right? So I wouldn't surprise me to see a move of more than 4 ticks in the 10-year treasury against me, and me still be right. But what I would not expect is to be in it for 30 minutes and not make money, right? If it's not going within the next 10, 15, then I'm doing it wrong with the way that I try to trade, at least, because I'm trying to trade on something that I have an idea will bring orders in, that I think is able to predict the future orders. If I get into that trade and then it's been 15 minutes and that future orders haven't come in yet, then something's wrong, right? Why aren't those orders coming? Well, if I knew that they weren't going to come yet, then I wouldn't have taken the trade yet, right? ZN is a lot, and sometimes it just chops and will eat that stop too many times. Yeah. I mean, when I've traded ZN, a lot of the problems that I've had are just like that. Oh, you purchased an OBS? That's a good way to do it. Yeah. That basic course is us. I love that. I love reading that. You know, because it's just for once, this is somebody coming in and saying, well, I don't, you know, this is crazy hard. But here's something so that you can at least understand what's going on. Right. That's what John Grady's course is about. That's what I like about it so much. It's no BS. Yeah. Really, it really does live up to its name. Ran at 5 ticks though, wasn't enough for me. Yeah. Like if you had put the 4 tick stop on it, that would still would have stopped, right? Tight stops force better execution. That's true. But like I said, like sometimes you have to give it room to breathe. Like the more room you give it to breathe, the longer, the better of a trade you can get, right? Because the ones where I think that I do really well lately and have kind of kept my head above water on my micro trades is that, you know, I'll take a trade, and then if I don't get something in the next, you know, 10, 15 minutes, I'll get out. But then I'll get a trade that goes my way, and then I'll sit in it for 2 hours and make like $50 or whatever the deal is, right? Like I'll get these winners that are just many, many times larger than my losers, and I'm in this most recent regime, I get them frequently as well. And that more than makes up for all the times that you get stopped out. But you know, I want to be able to allow it to breathe a little bit so that I can give it enough room to do that, because you know the way that the treasure goes. I mean, this move where it kind of went down like 17 ticks without stopping is a little unusual. Like usually it will like go down 8 ticks and then come back 6 and then go down another 8 ticks and come back 6, right? Small losses and small winners, and every once in a while a big winner. Yeah, exactly. You want a far right tail, no far left tail. Actually, I don't know if I don't think you actually want small winners and losers. So if I could. So when we're looking at the distribution of our trades, okay, if we have it like this, okay, oops, and it's so hard to draw sometimes, okay. So here is like a if we want to have a winning trade, so we want to have like a normal distribution over here like this, okay. What a lot of people do, what most traders do, what most traders do is they'll take really small winners. So you get a thing like this where the right tail isn't all that big. Most of your trades are kind of on the winning side, right? But then you have this really fat far left tail. This is what most people do, right? Because you're basically you're trying to make your average winner too consistent, essentially, right? Your average winner is a little bit too big. What I would prefer instead is something where if we try and draw it on the same scale here, okay. What I would prefer is something with a little bit fatter of a distribution, right? There's going to be a pretty even distribution across all of these winners. But actually, what I would like is like these losers are kind of limited like this, and then my winners are kind of like a tail like this, right? That would be like the optimal trading strategy, right? So when you draw, oh, I did it with the wrong pen. That's fine. So when you draw this one, what you get is you get something that's, pretty consistent, and then all of a sudden it goes gadoosh, and you blow your account, right? That's what this strategy does. This strategy is going to go back and forth a lot, right? But then eventually you're going to get a big one like this, right? That's a way better strategy. Basically, what you want to do is you want to trade kurtosis for variance. So you reduce the kurtosis of the distribution. It will increase the variance. So your swings in P&L will be wider, but ultimately you're making money. And then, if you are able to eliminate this far left tail right here, right, then you should be able to get a favorable Sharpe ratio. You should be able to get to a situation where the amount of money you're making per unit of risk is favorable. That's how I would do it. So a lot of traders will, and myself included, want to take such a small trade that it's like small winner, small loser, and then all of a sudden one day you screw up and it's this huge loss, right? And it screws everything up. And then you go, okay, well, we need to not do that. Let's come back and not have those big losers anymore. And then you do it again, right? I think that I've been able to get away, at least in the treasuries here, from the situation that makes it so that, I'm bound to have like a really dismal losing day eventually. But I still have a left tail because of mistakes. So, okay, guys, it is time to get going. Time to get going. Tight range. After ECB leaks. That's what was the news was today. I got to get going. Thank you guys. Good discussion today. Lighter trading, but it's summer. It's okay. I will see you guys tomorrow. In the meantime, stay profitable, friends, or at least don't lose it all, because we still got plenty of fun stuff to come.